Good afternoon, and thank you for inviting me to speak at your conference on advancing corporate governance in an age of disruptions. Yes, my name is Jan du Plessis, and I'm chair of the Financial Reporting Council in the UK. So I've been in post since the beginning of this year, and I took on this role with a sincere desire to give something back in public service after a long career in the private sector. So after 40 years in the world of business, however, I still struggle to describe myself as a regulator. I still see myself as a business person, but one who now chairs a regulator, bringing my private sector experience to bear to improve standards of corporate governance and audit. And because I know our work is so important to the prosperity of wider society, and that everything we do is aimed squarely at serving the public interest, chairing the FRC for me is a real privilege. And in addition, of course, it gives me the opportunity from time to time to speak to colleagues around the world who share my interest in these very important topics. I'm going to take the opportunity today to talk to you about how internationally shared principles and standards on corporate governance can help all stakeholders navigate these changing times, from governments and regulators to investors and users of corporate reporting, as well as the workers, suppliers, and other stakeholders that make up our global ecosystem. I would also like to provide the UK context by sharing what has worked for us in the UK Corporate Governance Code and where we are headed next in the UK with corporate governance reform. So why, you might ask, why do we need an effective corporate governance network? An effective corporate governance framework, as set out in the OECD Principles or in country-specific frameworks, such as the UK Corporate Governance Code, is essential to underpin the effective working of financial markets and investment decisions. And in a global economy, this is important not only at national level, but at international level. In times of disruption, the quality of these frameworks is more important than ever. However, the fundamentals, of course, are the same. Good governance leads to good decisions. Individual countries will decide for themselves what is the most appropriate framework for them, below an overarching umbrella of international standards, and they have to navigate political changes and local approaches to regulation that are relevant to their political leadership, their culture, and local societal expectations. However, as regulators, we know that removing or at least minimizing uncertainty helps investment and growth for all stakeholders. Now, as this conference is about the age of disruptions, I think it would be helpful to explore one area of greatest disruption to our markets, our lives, and our planet, and that is climate change. Climate change is clearly one of the defining issues of our time, and by its nature, material to companies' longer-term success. Investors are therefore increasingly interested in the impact of climate change and in all aspects of ESG in corporate governance, and how we set the appropriate frameworks to address this, both domestically and globally. The UK Corporate Governance Code requires greater consideration by the Board of Directors of the impact of business decisions over the long term and on a wider range of stakeholders, including those related to climate change and the environment. We also have a stewardship code that sets high stewardship standards for those investing money on behalf of UK savers and pensioners and those that support them. Institutional shareholders can sign up to the stewardship code. However, to be recognized by the Financial Reporting Council as a signatory to the code, investors are expected to take account of environmental, social, and government factors, including climate change, in their interactions with investee companies. Now, because climate change is so obviously a global challenge, I firmly believe that this is one area where clear global principles will be of enormous benefit to us all, and if I may say more importantly, our children and our grandchildren. Against the backdrop of a broader discussion today of the OECD Principles of Corporate Governance, let me now turn to how we have approached corporate governance in the UK. The UK Corporate Governance and Stewardship Codes have long been a framework designed to make the UK a great place to do business and support UK prosperity. As you may know, compliance with this code is not compulsory, and it operates on a comply or explain basis. The main focus of the code is in three areas: the board of directors, including their leadership and responsibilities, a system of internal controls for audit and risk, and executive remuneration. The code expects these to be aligned with company culture, purpose, values, and strategy, underpinned by clear and transparent disclosure, and with emphasis on wider stakeholder consideration and engagement. Now, the OECD principles are naturally more high level and less directional than our code, as they incorporate the same overall approach into multiple jurisdictions, which will encompass different laws, different codes, standards, and of course, local practice. This allows for a greater degree of interpretation, for example, in the differentiation of one versus two-tier board systems, or whether to use comply or explain, or legally mandated standards. And this is of course appropriate, indeed unavoidable, that this flexibility exists at the level of international principles. However, we can and should all also share our experiences at the national level to ensure they remain fit for purpose and bring together the best of corporate governance standards, best practice, and guidance across the world to inform future reviews. As I've said, this is never more important than during times of change or disruption, when the highest standards of corporate governance protect all stakeholders who rely on high-quality reporting. So, in that spirit, let me therefore take this opportunity to share with you some important changes we foresee in terms of corporate governance in the UK over the next year or so. Now, I'm not going to blame anybody if they accuse me of being biased, but I do believe that the UK is rightly renowned for its high standards of audit and corporate governance, driven by the FRC and our Corporate Governance Code. Nevertheless, we now believe there is work to be done to further improve the system so that it works for everybody, not only for businesses and shareholders, but for other stakeholders too. Over the last few years, the UK government and the FRC have been working together on wide-ranging reform of corporate governance and audit. This ultimately will lead to legislation to create a new regulator in the UK, the Audit, Reporting and Governance Authority, or ARGO, with substantially increased powers. So for us at the FRC, our eventual transformation into the new ARGO is an exciting journey, and we are hard at work to ensure that we have the capacity, the competence, and the processes in place to take on our new obligations when the time comes. While we await legislation to take this forward, the FRC has started the work of revising existing codes, strengthening auditing and accounting standards, setting expectations to drive behavioral change ahead of statutory powers, and the development of guidance to address the key challenges facing companies and investors in this rapidly changing and frequently disruptive world. As part of our wider reform agenda, we will shortly be starting a series of reviews of the Corporate Governance Code, and this will certainly build on a strong and solid foundation. In a position paper we published in July, we set out proposed changes to this code. These will provide a stronger framework for reporting on the effectiveness of internal controls and board responsibilities for expanded sustainability and ESG reporting, and new guidance on enhanced resilience statements and fraud reporting by directors. The revised code will interact with other changes to corporate governance and reporting that we are planning in the UK, including, for example, firstly, a new resilience statement, which is designed to replace the going concern and viability statements by requiring directors to consider and report on matters they believe to be material and which could have an impact on the company's financial resilience over the long term. Secondly, the publication of an annual audit and assurance policy for shareholder consultation. And finally, also the development of new standards for audit committees. The new code will look at necessary revisions and will take into consideration a whole range of factors, and I'll just mention a few. One, our recent research and reports, including FRC annual corporate governance, reporting and thematic reviews. Two, importantly, the need for a framework of effective and prudent controls. Three, changes needed to reflect the wider responsibilities of the board for expanded sustainability and ESG reporting. Four, a provision for boards to consider how audit tendering undertaken by a company takes account of the need to expand market diversity. Now, this proposal reflects the competitive objective that will be given to AGA to increase the resilience, diversity, and competitiveness of the UK audit market. And finally, the new code will consider other proposed changes to legal and regulatory requirements that will come forward, will come out of legislation that is to be brought forward by the government. Work on the new corporate governance code is already underway, with formal consultation expected next spring and a new code adopted towards the end of next year. I firmly believe that our ambitious program of reform will ensure that the UK maintains its global reputation as one of the best places in the world to invest, to do business, and to raise capital. So, finally, ladies and gentlemen, thank you for listening to me today. I'm sure that all the participants in this conference are ultimately striving for the same thing: the attainment of high standards of corporate governance, in the firm knowledge and belief that there is a direct correlation between governance standards and the stability, prosperity, and sustainability of society at large. I hope that by sharing with you some of my thinking in the UK, I've given you some food for thought that you may find helpful, whether that is in relation to the OECD Principles of Corporate Governance, which is of course at the international level, or possibly around codes for application at a more local level. But I want to leave you with an important, very final thought. I believe there will never come a day when we can say that corporate governance is good enough. So I'm afraid this is a journey without an end. The world does not stand still, and neither can we. We must ensure that we're constantly moving forwards as the environment around us continues to evolve. By continuing to pursue high standards of corporate governance, we will all be making a meaningful contribution to the health and the well-being of the societies we serve. So that's all from me. Thank you for listening, and I look forward to what I'm sure will be an interesting discussion with my fellow panel members. Thank you.